My name is Paul Brandt, owner of Clear to Close Brokers. In this video, we are going to break down prepaids as it relates to property taxes. A common question I get a lot is why, if my payment includes property taxes and insurance, do you need to collect as a lender so much upfront at closing? Well, to really simplify this, I think it's really important just to break down two things. Actually, we're going to look at three things. Number one is that you have to have an understanding that your property taxes are paid twice each year, right? One in November and one again in March. Secondly, lenders follow just a chart, just a formula. And there might be a little bit of variance because some lenders like a little bit more reserves or a little bit less reserves. But on a whole, if you take a look at this chart, this is where the amount is calculated, right? So for example, take a look at the top row. If you close your loan in January and your first payment is in March, we will need to collect 6 months of property taxes to ensure that when your property taxes are due, there's going to be enough in your account to pay them. But to give you a visual, let's break this out. Simple. So let's say, for example, that you bought a house for, let's just say, $500,000. Now in California, we use 1.25% property tax base, which is going to be based off of your sales price, and that's going to give you an annual amount of $6,250. Now on a monthly basis, that's going to be $521. But for each installment, you're going to owe $3,125. Now, keep in mind, if you close in January, your first payment is going to be due in March. So in January and February, there is no taxes that are being added to your impound account as a result of your monthly payment. So come March, your first installment, your first payment will be made, where $521 of your monthly payment will go into your escrow account. But keep in mind, come March, your first installment of $3,125 is due. So if we do not collect money up front, when it's time to pay your property taxes, we will have a negative $2,600. So let's keep walking this through. So then you'll make your 521 here, 521 here, 521 here, right, et cetera, et cetera. And then here again, you have to make your payment of $3,125. And after 500 and after your December payment, you will have $1,000 left, or a negative. So let's go back to our chart. If we go back to our chart and we close here in January, that means we need to collect 6 months up front. So let's come back to our chart here. Let's add an initial deposit of 6 months, which will bring us to $2,085. So then we come make our January payment of $521, $521, and $521 again. So it's going to have to double count that. By the time our taxes are due again in March, the following year, we will have enough in that account to make that payment. So I hope this video helps. If you have any questions or if something's unclear, let me know. I would love to help you. Paul Brandt at Clear to Close Brokers. Talk to you soon.